It's a pleasure to welcome all of you to the 7th edition of VCCircle India Limited Partners Summit 2016. So we are proud to host this flagship annual conference for the 7th time, which brings together the top private equity investors, limited partners, family offices, economists, and other experts on a single platform, essentially to discuss the way forward for the economy and what that means for private equity industry in particular. This event assumes even more significance today, as we just came off a fantastic year for Indian private equity. The growth in investments have been led by heavy capital inflows, primarily into two sectors: consumer discretionary and information technology. Both attracted about $5 billion each. And within that, e-commerce and internet sectors really attracted most of the inflows. Number-wise, we are definitely the fastest growing large economy in the world. But the economies are yet to converge on a premise that all is well with the country, well with our economy. So for instance, the revised GDP numbers portray an overtly robust picture of the Indian economy, while other macro indicators such as bank credit growth, rural demand, and factory output do not really support such a depiction. So that's for the experts to really discuss and really tell us what is actually in store for the economy and what needs to be done, and probably their advice for the policy makers. So this is one of the reasons why we kick off this conference with the economy panel, and thank you very much for all the economists who agreed to come and speak at and kick off this conference. Thank you very much.
Please join me in welcoming Cabinet Minister for Information Technology and Panchayat Raj, Shri Kalvakuntla Taraka Rama Rao.
India is outperforming today, even if only from a purely relative perspective. Very exciting times, though, to be in India right now. In Hyderabad, we've set up the country's largest technology incubator called the T-Hub, which is a collaborative effort of the government and the premier academic institutions that are centered in Hyderabad. We have Nalsar, which is a premier legal institution, law institution, which is a partner, which is going to take care of the intellectual property and which is going to take care of the legal issues. We have IIT and IIIT Hyderabad, which are the technology partners, and then we have ISB, the Indian School of Business, which is the business partner, which will do the business mentorship. We also are setting up a first of its kind of accelerator in India, a fund in India, which will also propel with a fund size of 125 crores, again backed by the state government, and T-Hub being the anchor manager and as the primary general partner. Unlike the standard venture capital funds, this is a highly risk-free and economics-driven engine for limited partner investors for multiple reasons. This fund will invest only through the accelerator program by adopting a very selective process. Significant curation for the startups during the program is also provided. Scaling up of the startups during and after the program is also enabled. We also curated for the subsequent rounds of investment. We also focus on sectors that make sense for India. And Hyderabad already has a fantastic ecosystem which has a great foundation. So with the government and the business converging its ideas, coming to a commonality of thought, I think there are really some interesting issues that can be addressed, especially the large problems which can be solved, which requires everyone's support, which require sometimes competition to work together. All of this can be accomplished together with government playing the role of an enabler. So once again, thank you for this opportunity, and I look forward to working with most of you, and I look forward to seeing most of you in Hyderabad. Thank you.
Join me in welcoming Joint Secretary, Department of Industrial Policy and Promotion, Ministry of Commerce and Industry, Government of India, Shri Atul Chaturvedi.
The biggest challenge for us in terms of Make in India initiative, and for that matter any other important initiative which has been taken by the government, is that we can't see the results of it immediately. We do try to make a difference in the process. We are trying to overcome a legacy issues with reference to various things which were part of the rule or part of the game earlier are now not anymore part of those rules and games. And therefore, the results would take time to come on. We had this workshop in in December 2014. I think it was one of the path-breaking workshops which we had. All the stakeholders, whether it was industry, whether it was government, whether it was media, whether it was other stakeholders who could have a stake in any one of those decision-making with reference to the initiatives on Make in India and with reference to the ease of doing business, they all gathered in Vigyan Bhavan, and they were housed for a whole day in Vigyan Bhavan in separate rooms. And they had a churning and they had a discussion, brainstorming on what needs to be done in next 1 year and next 3 years in terms of 25 focus sectors and what needs to be done in terms of the ease of doing business. And they arrived at common points of agreements. And those presentations thereafter was made before a house of 1,200 people and the whole cabinet of union, including the Prime Minister being present, and the media being present, and each of these 25 focus secretaries made commitments in front of this gathering that this is what they will achieve in next 1 year and next 3 years. In addition to that, we also have an organization called Invest India, which is an investor facilitation kind of interface between the government and the investor. And this has become very active since last 1.5 years, 2 years. And so therefore, the number of things are being done with the help of this. So these are some of the things in terms of ease of doing business challenge which India faces in terms of Make in India. The second aspect is how do we ensure that India becomes a part of global value chain? And obviously that has to come in because if we are talking about manufacturing, if you're talking about driving export out of manufacturing, then we have to become part of global value chain, and therefore number of things which have been done in terms of dynamic FDI policy reforms, which I just talked about, and number of other things which have been done in terms of the policy decisions, whether through taxation purposes or through patent regime and all. So that is ensuring that we become part of global value chain. The third challenge in terms of this demographic dividend, which does not become a demographic bomb at the end of it, and therefore number of these initiatives which I just spoke about in terms of scaling or startups is an initiative in that direction. And there are a number of other things which you must have seen through various reports which have come in from various multi-level organizations across the world, where India is being talked of as #1 for investment destination, fastest growing economy. So these are some of the things which have resulted this into, and therefore I think these challenges are challenges, and it will show results soon, but then there are a number of steps which are being taken to ensure that we have a change in the mindset at the ground level, and how do we ensure that what has been envisaged in terms of the Make in India is actually happens in this country. Thank you, ladies and gentlemen.
Getting ready now for our panel, Changing Dynamics of LP-GP Relations. Are LPs the new GPs? This is what our panel will be discussing threadbare. Please join me in welcoming South Asia Bureau Chief, the Wall Street Journal, Mr. Gordon Fairclough.
But I guess the most basic and fundamental question that sort of on everyone's mind is India a good investment? And what do you guys think about it? Jürgen, shall we start down at your end?
We haven't been as excited about India as possibly many of you. Particularly in the sectors we do not know very well. We focus ourselves on financial institutions and the energy sector, by the way, both quite regulated. In all the other sectors, we're actually struggling. And we're struggling because of many reasons. Some of the investments we have made, they're probably in companies which we didn't know too well. Transparency was not too good. Then if you try to go to court, well, not even, don't try. I think the legal system has been quite, let's call it ineffective here. So our returns have been relatively dismal.
Lucian?
I think India, it's a difficult market for foreign investors, for domestic investors, especially in the private equity side. I think the key is you really have to choose the right managers. You have to choose the right sectors. The way I look at it now, the new economy is interesting, the consumer sector is interesting. I've never been a fan of infrastructure, for example, and I guess I've turned out to be right. But over the years, when I started in '95, I've seen a lot of progress here. The airports are different. The roads to the airports actually work now. So I'm encouraged on a number of fronts. I'll just kind of take a pause there.
Great. Simon?
I look at India from the perspective of Singapore, where I'm based. Singapore itself has become a very important font of capital and interest in this continent. Where the question marks reside, which I hope we're going to tackle today, are what is the best way to tackle India? Should one be going through the established private equity groups? Have they done a good job over the course of the last decade? Have they done a good job relative to public equities? So the public equity markets have potentially outstripped opportunity in the private markets, which I think have been very, very challenging. That is why I think there is this big shift now away from investing into the established private equity industry, the GP LP model, into far more private transactions, direct investments, notwithstanding the non-performing loans, the position of the banks, which are overburdened with non-performing loans. There are opportunities also in the debt markets to intermediate between where the banks perhaps were once upon a time and the needs of Indian companies. So we're finding that there is a lot of opportunity and interest, particularly from Southeast Asia into the Indian subcontinent.
As we see the dynamics shifting between LPs and GPs, how do you see the risks and rewards of that moving both for LPs, for PE firms, and also for companies seeking investment? Simon, would you like to get us started?
I think there are undoubtedly very significant risks, and that is why investors are looking to disintermediate some of the fees that the industry, the private equity industry, extracts. The co-investment model. We're in a worldwide environment where post the global financial crisis, 67% of private equity businesses have not been able to raise any money. They've not been able to raise a new fund. And so we're still waiting to see the outcomes of those tremendous vintages of the pre-financial crisis, which may well be disappointing. I don't know what the statistics are going to be like here in India, but from what I'm hearing anecdotally, there is considerable disappointment. It doesn't mean that India is not a place to invest. It's more a question of whether the old model is the appropriate way to invest.
Sir?
What we're trying to do is we don't have any presence here in India. And I think to be successful, certainly when making equity investments into small and medium-sized companies, you need to be on the ground. You need to once in a while kick the tires, and once in a while, probably is every few weeks or so. We cannot do that ourselves, so we still need you guys. But indeed, increasingly, we would like to have either right of first refusal or whatever it is on the co-investment side, because co-investing alongside you means that you can be our eyes and ears. And one of the other reasons why we like that is historically in our worldwide portfolio, and we have roughly 1.5 billion euros invested in related to equity. Direct investments, the returns are significantly higher than the net returns from private equity funds. So this is one of the other reasons.
Lucian, what do you think of the co-investment model?
I think the broader topic here, to me, is about disintermediation in the entire private equity industry. It's not just happening at the GP level. I think it's happening at all levels, all the way from the ultimate LPs, the pension funds, the endowments, to the fund of funds, to the GPs that I assume a number of you are. I think the question being asked is, what is the value you're adding? can I do it myself? I mean, the one big reason why investors like Jürgen is looking for co-investments is to me would be to look at a kind of on a blended basis, a lower fee when they make commitments to funds. You know, how do I actually kind of, you know, minimize my fees and carry to that commitment? So, and there's fee pressure everywhere. You know, ultimate investors are asking, you know, this asset class as a whole, I think, you know, to me, and if you look at the stats, you know, it has proven itself that it has outperformed publics for the last 10 years. But the question is, I think it's getting more competitive. There are more GPs in the market globally, not just Asia. There are more players in the market. How do you remain relevant? You know, when you go out and raise your next fund, how are you differentiated? How are you different?
Great. So, thank you. Really appreciate you all having us here. Thank you.
A very warm good evening, ladies and gentlemen. It is indeed my privilege and honor to welcome you all to the 5th edition of the VCCircle Awards here in the pulsating city of Mumbai. Without any further ado, let me invite on stage Mr. Sahat PV to tell us more about the awards and this incredible journey. Please welcome Mr. Sahat PV.
On behalf of the VCCircle Network, I would like to extend a very warm welcome to all of you to the 5th edition of VCCircle Awards. Friends, we started with VCCircle Awards about 5 years ago with the objective of recognizing on a public platform like this, innovation and entrepreneurship, essentially supported by private equity and venture capital, and become a big source of encouragement and support to hundreds of startups and small and medium scale enterprises, so that they take pride in the fact that they're making immense contribution to this nation in creating jobs and wealth. So we wanted to recognize the entrepreneurs behind these companies and also the role of private equity in backing these entrepreneurs and in turn help India's economy. So we have identified about 12 categories of awards today, which will be given away to these entrepreneurs and also the ecosystem players. I would like to thank our distinguished jury for spending their precious time, and I would like to congratulate all the winners in advance who are going to be announced right now. So let's move on to the awards presentation. Thank you very much.
With this, we are finally set to give away our first set of awards. Ladies and gentlemen, our first award category for this evening is for Consumer Internet Company of the Year. To present this award, may I invite Rupa on stage. Please welcome Rupa Kudva. May I request you to please announce the name of the winner.
And the winner is BigBasket.com, Supermarket Grocery Supplies Private Limited.
Thank you, Rupa, for doing the honors. Let's move on to the second category, ladies and gentlemen, which is for Education Company of the Year. To present this award, may I invite on stage Gopal Srinivasan. Kindly do the honors of announcing the winner.
And the winner is Byju's, the learning app.
Thank you so much. Moving on to category 3, ladies and gentlemen, which is for Financial Services Company of the Year. To present this award, may I invite on stage our special guest, Simon Hopkins.
The winner tonight is Financial Services Company of the Year, Janalashmi Financial Services Private Limited.
Heartiest congratulations to you, and thank you, Simon, for doing the honors for us. Moving on to the next category, ladies and gentlemen, the healthcare sector. So we would like to give away this award for the Healthcare Company of the Year. To present this award on stage, may I invite another jury member, Anjali Bansal.
I'm pleased to announce the winner is Rainbow Children's Medicare Private Limited.
The next category is for Investment Bank of the Year for Private Equity Venture Capital. To present this award, may I re-invite on stage Rupa Kudva. And let's hear who the winner is.
The winner is Avendus Capital Private Limited.
Our next category, ladies and gentlemen, is for Law Firm of the Year. To present this award, may I invite on stage Gopal Srinivasan.
And the winner in this category is AZB and Partners.
Let's move on, ladies and gentlemen, to the Deal Maker of the Year. To present this award, may I invite on stage Anjali Bansal.
The Deal Maker of the Year goes to Jeff Farmer and Mylan.
Moving on, ladies and gentlemen, our next category is for Exit of the Year. To present this award, may I invite on stage Simon Hopkins.
For this year, Exit of the Year goes to Mankind Pharma and Chris Capital 4 Fund.
Let's move on to our next award, which is for Fundraiser of the Year, Private Equity. To present this award, may I invite on stage, rather re-invite on stage, Gopal Srinivasan.
The winner is Indiam Fund 5, India Value Fund Advisors Private Limited.
Our next category of the evening is for Fundraiser of the Year, Venture Capital. To give away this award, may I invite on stage Rupa Kudva one more time.
Delighted to announce that the winner is Kalari Capital Partners 3, Kalari Capital Advisors.
Our next category is a Jury Special Award for Innovative Business Model of the Year. And to give away this award, I think I'll take this opportunity of re-inviting on stage our all three jury members and of course Simon Hopkins, our special guest. May I invite all four of you on stage together.
And the winner of the Jury Special Award for Innovative Business Model of the Year is Star Agri Warehousing and Collateral Management.
Our next category is for Startup India Initiative.
The Startup of the Year is Delivery Private Limited.
Ladies and gentlemen, with this we come to the end of the awards this evening. And on behalf of VCCircle Awards, I'm your host, Dr. Divya Jetli, signing off for the night. Take care, cheers, and drive back safe.